My name is Rolf Cederstrom, and I'm the founder and CEO of Digital Origin. We have about 100 employees, and we've developed a platform for instant credit. Oh, great. There we go. We've lent about 200 million euros, and we are a regulated entity supervised by the Bank of Spain. Very quickly, what we do, like some of the other companies around here, is that, let's say you're shopping online, you're buying something for 2,100 euros. In addition to the traditional payment methods, we offer installment loan product. Within one click, you can apply for a credit, and the credit application is evaluated instantaneously, and you're approved within seconds. It's about a 3-minute end-to-end process, no paper, fully automated. This is to be compared to the traditional credit process in Spain, which is manual, requires documentation, and takes about 3 to 4 days to complete. So there's a fantastic user benefit to this. The merchants benefit greatly as well. When we look across our 200 or so merchants, we capture a share of checkout somewhere between 10 and 20%, depending on the merchant. But more importantly, it's really used for high-value transactions. We're about 5 times an average transaction on any merchant. And this is really what drives sales. It's a tool for the merchants to sell higher value products. Consumer finance is a very attractive market. It's both large and very profitable. Last year in Spain, 28 billion euros of consumer credit was originated, and the outstanding balance is about 60 billion. We believe the actors made around 2 billion euros in profit, and it's just a handful of banks. The companies that we can look at in isolation, in particular WeZinc and Cetelem. WeZinc is a major credit card issuer, and Cetelem is the personal finance arm of BNP Paribas. Their return on equity is 35% and 28% respectively. This is to be compared with the bank's average of about 9%. And this really indicates that this is where the banks can make money. Lending money is relatively easy. It's critical, though, that you can recover it, and that's the harder part. So typically we're asked, what default rate do you operate at? And that question somewhat misses the point, because what you need to do is you need to optimize between your acceptance rate and your default rate. Ideally, having a very high acceptance rate coupled with a low default rate. And your ability to do so is really a function of your credit model and your risk model. So we invest heavily, and this is really our core competence around being able to push that frontier as much as possible with big data and machine learning capabilities. Our goal is to get to 100 million loan book within the short term across 3 products. So we have our e-commerce product that I explained. The system is also adapted for any in-store transaction. So rather than waiting 3 days, you can actually just go into a store, get a credit, take your product, and leave. As an issuing bank, we're also issuing credit cards. And medium term, we need to get to about a €1 billion loan book. We think that this is the scale that's required for us to be able to get a cost of capital which is competitive vis-à-vis the banks. And this is really critical in our business. Furthermore, we are looking to expand from our base in Spain into France, Italy, and Portugal, capturing the Southern European market that we think is very large, but much more or much less sophisticated than let's say, the UK market, where you have plenty of actors. It's really just dominated by a few banks. Now, entering these, internationalizing a credit business is somewhat complicated because we need regulated offices in each country. So despite being able to passport our license from Spain, there's a fair amount of adaptation. But we think that the ability to leverage the learnings we have from Spain and drive instant credit across this region are definitely worthwhile. So, thank you very much, and I hope you learned something.